Good evening, ladies and gentlemen. John Kelly for Options University on Sunday, December the 4th, 2011. First, the disclaimer. Trading has been, always will be, risky. But let's move right from there to see how the markets may be indicating that they're turning around. The hedge fund managers may be coming back. Here's the VIX 20-day buy-to-open put-call volume ratio. And as you can see, we have bottomed and we are turning up. This is an indication that the hedge fund managers are buying long positions in the market and using puts to hedge their positions. And we've achieved a meeting, a perfect storm if you'll have it, on the SPX. We have the 150-day simple moving average and the 320-day simple moving average all have converged with the 200-day moving average. Where the market goes from here will be big one way to the upside or to the downside. And the market this evening opened up 80 points, so they are wanting to go up. It looks like they don't fight the Fed is the bottom line. There will be problems in Europe, but I think the market's now confident that the Fed and the other banks have managed to figure out a way to continue to stimulate the economy. On Monday, we'll look ahead here and see that factory orders at 10 o'clock, ISM also at 10. Not much in the way of earnings. Before the open, we have Dollar General that will be coming in. And then on Tuesday, there's no economic news. And before the open, we'll have AutoZone and Toll Brothers after the market, Men's Warehouse. Wednesday, 10:30, crude inventory. Once again, 3 o'clock in the afternoon, consumer credit. Earnings, there's nothing there. On Thursday, once again, weekly jobless claims and wholesale inventory. Before the open, Costco. And after the close, Diamond Foods was on a tear for a while, but ran into some problems here in the last 3 months. Be interested to see if they've straightened it out and if they're back on track. It's a good stock to keep an eye on. On Friday, we'll get trade balance in the morning and then Michigan settlement just before 10 o'clock. Earnings, nothing there. Quick look back at November. The opening day, as I said at the beginning of November, had been down for the last 5. And probabilities worked out. Seasonality kicked in, and now we're down 5 of the last 6. Monday of expiration week has been down 7 of the last 11, and now it's 8 of the last 12. However, expiration week had been finishing up 6 of the last 8. Now it's 6 of the last 9. Thanksgiving week, which is generally a positive week, was the worst Thanksgiving week since 1932. Now, December, not much goes on at the beginning of the month other than the fact that it's the best performing month of the entire year. If the market's going to make money, this is the month it's going to do it in. The NASDAQ has been up 17 the last 23 years. Triple witching expiration week has been up 21 of the last 26. That's 2 weeks away from now. The Friday of triple witching expiration week has been up 20 of the last 28. Last trading day before Christmas been up the last 3, but on the downer, the NASDAQ has been down the last trading day of the month 9 out of the last 10 times. For some reason, the chart didn't catch that last little bit. Here's the base recount list. And in the gold member section, we're going to take a look at Panera Bread, Perrigo, and World Fuel.